AMTD's track record as an underwriter is abysmal. Despite the bull market, 87% of its US IPOs have resulted in losses. Despite the sustained bull market, 87% of AMTD's US underwritten IPOs have resulted in substantial losses for investors. Within about 2 years from listing, AMTD's US IPOs have plummeted a median 48.7% and an average of 34%. Ebang directing almost the entirety of its IPO proceeds into the bonds of an obscure company related to an underwriter with a dubious history comes off as nothing short of highly irregular behavior. With its IPO cash gone, Ebang raised $21 million to a secondary offering to be used primarily for development. Around the same time, $21 million went to pay back related party loans to the chairman/CEO's relative. With essentially all cash proceeds from its IPO directed back to its underwriter, Ebang was almost immediately short on cash. On November 2020, it tapped the market for its first secondary offering, announcing a raise of $21 million. In its press release, the company provided the following explanation for how it would use the proceeds. To quote, "The company intends to use the net proceeds from the offering primarily for development and application of blockchain technology into financial services, sourcing core intellectual properties relating to its businesses, corporate branding and marketing activities, and general corporate purposes, which may include working capital needs and other corporate uses." End quote. Despite these representations, we see from a prospectus filed just weeks earlier that the company used $21 million to repay related party loans to its chairman/CEO Dong-Hoo's relative. Part 3. Ebang's business operations in mining or lack thereof. Ebang claims it is a leading Bitcoin mining machine producer and that in 2019, it was the leading Bitcoin miner in the global market. In the press releases, Ebang consistently claims to be a leading Bitcoin mining producer globally. See a recent February 17, 2021 example here. To quote, about Ebang International Holdings Incorporated. Ebang International Holdings Incorporated is a blockchain technology company with strong application-specific integrated circuit ASIC chip design capability. With years of industry experience and expertise in ASIC chip design, it has become a leading Bitcoin mining machine producer in the global market with steady access to water foundry capacity. With its license or registered entities in various jurisdictions, the company seeks to launch a professional, convenient, and innovative digital asset financial service platform to expand into the upstream and the downstream of blockchain and cryptocurrency industry value chain. For more information, please visit https://ir.ebang.com.cn. End quote. This claim is repeated on Ebang's prospectus and virtually every filing the company has issued. According to Ebang's website, it was the leading Bitcoin mining manufacturer in terms of hash rate sales in 2019, putting it above well-known industry competitors such as Bitmain. To quote, miner business. In terms of hash rate sales in 2019, we were the leading Bitcoin miner manufacturer in the global market. We are a pioneer in researching and developing ASIC chip technology used for a blockchain application in China. We are also one of the earliest Bitcoin miner business in China with proprietary ASIC chips developed independently. Our research indicates this extraordinary claim was backed by absolutely no evidence. Ebang is not the world's leading Bitcoin mining machine producer. In fact, it has sold a pittance compared to other large Chinese producers. A far larger competitor called Bitmain controls around 65% of the Bitcoin miner market in terms of hash rate in 2019. Bitmain is currently private and doesn't disclose its precise numbers. However, Ebang's prospectus discloses a breakdown of its annual sales and makes clear that it isn't even number 2. Terahashes per second, TH/S, is a key measure of mining machines' processing power, page 86. For 2019, the company sold total computer power of 5.97 million terahashes per second in 2019, an average price of $15 per terahashes per second. From these disclosures, it is evident that Ebang is not the leading mining machine producer in terms of hash rate sales. Chinese competitor MicroBT sold 6 times what Ebang sold in 2019, 600,000 units at an average of 60 terahashes per second per unit at almost double the price per terahashes per unit per second. In an industry scorching hot with growth, Ebang's miner sales have been in decline since 2018 and are now close to zero. Ebang notes in its prospectus that from 2015 to 2019, the mining machine market has grown at a 61.3% CAGR. To quote, sales of Bitcoin computing hardware, the majority of which comprise sales of Bitcoin mining machines, have surged at a CAGR of 61.3% from approximately $0.2 billion in 2015 to approximately $1.4 billion in 2019 and are expected to further increase at a CAGR of 24.8% to approximately $4.3 billion in 2024, according to the FNS report, page 1. Yet Ebang, end quote, Yet Ebang doesn't seem to be participating in this fast-paced growth. Ebang had its best year in 2018 when it sold 415,930 units at an average selling price of $737. Ebang's first half 2020 numbers imply it is on track to sell 11,588 units, a negative 97% decline. A 97% decline. Ebang's average selling price per unit during the first half of 2020 was $775. Of the limited sales Ebang has reported to date, many appear to be defective units or just fabricated altogether. Example 1. In 2018, a customer called Beijing Mob Color alleged in a lawsuit that an Ebang director asked them to fake a $15 million purchase through a round-trip transaction. Ebang was alleged to have engaged in yet another scheme to book fake sales in the run-up to its Hong Kong IPO, according to a Chinese court judgment. Customer Beijing Mob Color asserted that the director of Ebang, Zhang Hao, called an executive of Beijing Mob Color, Gu Hongliang, in November 2018 and told Gu Hongliang that Ebang was listing in Hong Kong and needed $1.5 million to balance its books. The two individuals have been classmates, according to local media reports. Beijing Mob Color asserted in its lawsuit that Ebang would arrange the payment of $1.5 million through a third party, which it would then use to pay Ebang. The Ebang director asked Beijing Mob Color to sign a letter to apply for delayed payment for around 15 million US dollars, which would represent a remaining payment for a purchase order of 100,000 mining rigs. Example 2. In the lead up to its Nasdaq IPO, Ebang claimed in a press release that it had a $100 million order from a company called Madison Holdings. Madison Holdings only had a $5.9 million in available cash around the time and mainly sold alcohol products. In October 2019, Ebang publicized a $100 million order from Madison Holdings, a company that retails and wholesales alcohol products, mainly red wine, but recently got into blockchain last year when it purchased part of the exchange, according to Diginex Limited. At the time of the announcement, Madison Holdings was a penny stock trading on the Hong Kong Exchange at 24 cents. It had unsegregated bank balances of 5.9 million US dollars on September 30th, 2019, according to its financials. Page 6. Madison's Hong Kong filings stressed that the deal was non-legally binding. Madison ultimately sold its cryptocurrency business 3 months later, in January 2020. Page 13. Ebang had a reputation for delivering defective products. Example, Chinese media reported that an order of 500 E10 miners needed 873 repairs in 3 months. While not well covered in the US media, extensive product issues at Ebang have been covered in Chinese media. A slew of lawsuits against Ebang's Chinese subsidiary suggest that the machines Ebang was able to deliver resulted in disputes. Chinese corporate information site QCC references at least 10 different judgment documents. As one example, according to a 2019 lawsuit by miner Ma Xiaoyun, 500 E10 Ebang miners he purchased were so defective that they started malfunctioning immediately and ultimately required 870 repairs in just 3 months. That lawsuit presented a live recording of Ebang Vice President Zhang Hao admitting the E10 miners had a high failure and repair rate. Ebang refuted the claims, claiming that the purchaser was responsible for the failures. The case appears to have resulted in a partial win for the purchaser, Xiao Yun, who received compensation for the miners' late arrival but not for the equipment itself. Ebang's prospectus disclosed another case where plaintiffs demanded to return over 47,000 machines. To quote, in June 18, 2019, an affiliated entity of one of the customers filed a civil action with the Yuhang People's District Court against the company in relation to 56,000 units of mining machines sold to the customer. The plaintiff sought for the cancellation of the underlying sales contract because the mining machines were not able to meet the requested performance specification. The plaintiff sought to retain the 47,151 units of mining machines that are under the plaintiff's custody. Affirmed the fact that the plaintiff had returned the rest 8,849 units of mining machines to the company and asked for damages totaling 1 million renminbi, approximately 144,000 US dollars, as well as all legal expenses in connection with the proceeding. The plaintiff withdrawn the lawsuit on January 21, 2020, and the case was closed. End quote. We interviewed former employees that corroborated the quality issues. A former employee in Zhejiang who was with the company for 3 years told our local investigator that the brand had declined significantly. To quote, now Ebang equipment is basically famous for being awful. The reputation is completely gone. Sales of miners are really bad. Collectively, these well publicized customer issues have contributed to Ebang's miner business decline in advance of its US IPO. Given the well resourced and credible competition in this space, we don't expect a revival to Ebang's deflated mining operations. Ebang likely came to the same conclusion and subsequently decided to pivot to developing its own cryptocurrency exchange. Our research suggests that this is just the latest doomed initiative to justify raising more cash from investors.